Everyone's here to talk about the stock market selling off hard yesterday, and we're going to go through a couple of things and then some things that might interest you. But yeah, it had a big massive day. We haven't seen the market down for a couple of weeks like that, and there wasn't really any concrete news that pretty much changed for why the stock market moved like that, which is really suspicious. But we are in a bit of a bear market, and when it's kind of controlled by a bear market, it's very hard for the stock market to break out of that downtrend, which I think it would have done. I thought when it got announced that there's going to be a pause in the tariffs of the China trade war, I thought that was the momentum that would push the stock markets up for the next couple of months until that came back around. I think that's on pause for 90 days. So I expected the market to go up in the next kind of 3 months from that. That was the kind of push for some a good bit of rallying, especially at Christmas time. We normally have what we call the Christmas rally. That's obviously kind of looking like it's not going to happen now, and I think this was like the final nail in the coffin to pretty much kill any momentum of having a bit of a rally from now into the new year, which is normally pretty much a good time for the stock market. If you remember last year, we had a pretty good time from now into about February. So that was a bit frustrating for a short term and a long term hold, really. But the only news that there was two pieces of news that kind of moved the market for these reasons, and it was that the Treasury yield has gone inverted. Now I saw this and I was like, wait, what? That's actually not true. It's actually gone inverted. It is pretty near flatlining, but it's not gone inverted like it's reported in the media. And I've noticed a lot of people also talking about it and mentioning it on YouTube comments. They've heard a few people talk about this, and I don't think they really know too much about it, and I think they're kind of just jumping on the bandwagon, and they didn't really know what it was before. Then they've heard this and gone, that's the stock markets are crashing because it's gone inverted, and I don't think they actually know what is what with that. It's currently not gone inverted. It's still got a little bit of a way before it does go inverted, which I'll try update you when it does go on, when it does go inverted on this channel. So that wasn't really true, and that wasn't a big fundamental change to the stock market. Normally it's seen as a signal of a crash, and even though it's a signal of a crash, when this has happened historically, it means it doesn't crash for another 12 to 18 months. So not the best of signal, because you've still got 12 to 18 months of trading right there. Another news is that Apple iPhone sales were pretty much confirmed that they're slowing down big time. One of the biggest sellers, which is Cirrus Logic, who sells parts to them, about 89% of their revenue comes from Apple, and they cut their guidance from 400 million down to 300 million going into next year. So most of their revenue, I think it's 89%, comes from Apple. So for them to be cutting that much revenue down shows that iPhone sales are slowing quite a bit. So that was confirmed. We'll never know now how much iPhone sales are going to slow down, because they've taken the actual iPhone unit sales off the actual figures that Apple are going to release from the future. So those were kind of the two biggest news. Apple affects a lot of stocks when it goes down, and that happened, and the Treasury yield going inverted, and that didn't happen really. So not two massive changes. As you know though, I'm not as bullish as I was last year on the stock market. If you watch my channel, I sold my shares about a month ago in the stock market. The reason why is because I believe that over the next 12 months the stock market isn't going to go up probably more than 10%, because there's a lot of stuff going on. I'd like it to. I always like the stock market to do well, but yeah, I don't think it'll go up more than 10%. So I needed the money, and over the next 10%, I don't see me getting that much of a gain. So there's no point in me being in the market and withdraw that money now at the prices that it was at about a month ago. So I thought it was a good time to sell the positions. If you're looking to buy long term, I think it's a good opportunity to buy long term for sure. If you're happy to hold that money in that stock for about 2 years, there's definitely some good bargains to be going on right now. But yeah, I sold my shares because over the next 12 months I don't believe the stock market will do that well. We're also in a correction phase, and that should take about 9 months for us to get out of it. If it goes on historic patterns. The other reasons why is that, you know, I was worried about the China trade war, which is kind of being put on pause for 90 days, which is good. But in 90 days, we'll have to deal with it all again and see if there's an actual agreement this time. I was a bit worried about the interest rates, which very weirdly, they said that 1 month ago that the interest rates are far off where they should be, and then 1 month later they go, they're about there now. And that was like 1 month apart. I just don't really understand that, if I'm honest, to be honest with you. I feel like Trump's put a bit of pressure on, going, you know, stop doing that, look what's happening to the stock market, this is because of interest rates. I don't know if there's a bit of, you know, bit of pressure from Trump going in there about the interest rates. I just find that really weird how we've gone from 1 month ago to being they need to go a lot higher to they're about where they are. That was a bit weird in my point of view. Companies starting to miss earnings, that's a little bit worrying for me. Guidance being missed as well and being cut short for next year, that's always not a good sign for companies. Job numbers, I always said that are a little bit higher than what is a good job healthy number for us. A little bit very high on the employment side, pushing wage growth up quite a bit. So maybe that job numbers could just drop slightly. Housing slowing down quite a bit. Leisure companies are slowing down with their revenue they're bringing in as well, which has always been a little bit worrying. People holding on to the money a little bit. So I've seen a few signs that I'm actually worried about, but the actual like yield going inverted, that doesn't bother me. You know, I've heard so many sort of stories about if the yield goes above this, it's worrying. If it goes below this, it's worrying. Oh, it's gone below this, but it doesn't happen for 12 to 18 months. I hear a lot of stuff about it, but it's not a big thing for me, if I'm honest, guys. So I just thought I'd just talk about the market selling off today, guys. Sorry about no video yesterday. Remember, the stock market is closed on a Wednesday, so I'll try and make videos for the rest of the week. I was very short on time to make a video for Tuesday. I think it's like the first day I've missed of uploading for a good few months. So sorry about that, but I'll get back onto it. So guys, thanks for all the support recently. Give the video a like, subscribe, and I'll see you in the next video.